In Money Watch, if you don't know by now, you should. It is tax day, but don't worry, there is still time. If you haven't filed yet and you want to get an extension, there are some ways to do it.
Jeanie Ahn is a reporter and producer for Yahoo Finance and joins us now. Okay, so there's some people freaking out. I mean, they knew it was tax day, but you know, you put things off. If you need an extension, do you still have time to ask for one?
You have an extension. You can get an extension. You can ask. You can file. You can still file by midnight today, but you can also ask for an extension. You don't have an extension to pay your taxes. You still have to pay up to 90% of what you owe if you don't want to have those penalties. You do have an extension to file for another 6 months. Okay. So you do have that, but a lot of people are freaking out and doing it either this past weekend or doing it today.
Yeah, definitely.
So how do you get an extension and still? I don't understand. How do
you're still going to owe?
You're still right. You still owe.
But how do you know what you owe? Is what you're asking.
Exactly.
So what you can do is, if you're working with an accountant, right, ask them, what do you think that I owe? They'll do it for you. You can file with them and file an extension with them and pay what you owe and estimate that. Now, you can overpay. When you overpay, you will get it back when you get that refund and you do file. Now, the best way, if you're doing it on your own, is to use a tax software. Get as far as you can, and that number that ticks up and down in the corner that says what you owe, pay that. And then as you're paying what you owe, you can say, I want an extension to file.
But what if you are one of those individuals who's getting money back? In other words, you overpaid throughout the course of the year. You get an extension, can you get your money?
No, you can't. You can't get your money.
Get your money early?
You get it back when you file. So that comes with filing. Yeah.
Rats.
Well, I can't guess.
Right.
Yeah, a lot of people are unhappy with the way that things went down
Let's
this year.
talk about that, because some people are a little disappointed they're getting back less money. Is there anything you can do about that?
So what you have to do is right away, we're already in April, right? So go to your payroll HR department and make sure that you are adjusting your withholdings. So the less that your number is on your W-4, the more that is taken out each year. So if you claim 0, that means the max amount of taxes is taken out. Another thing that you can adjust is your retirement savings, because if the more that you put in this year, and the limit for your 401 contribution went up this year to $19,000, up $500 from last year. So with that, that also lowers your taxable income.
So with the changes that occurred over the previous year, what can people do to prepare for next year?
So to prepare for next year, adjust your withholdings, definitely do your best to, adjust your retirement savings, and just, if you don't know what that means for you, literally what you owe right now, divide it by the number of paychecks that you have left so that you're not in a position where you're owing next year. Yeah.
That's good. So I know people have a tendency to sort of set it and forget it, especially when it comes to taxes. You know, you start a new job, you fill everything out, and then you just sort of never see HR again.
Yeah.
Go back and find out what's going on.
Yes, exactly, because that's the mistake. That's the #1 mistake. A lot of tax changes were made this year. People didn't know how it was going to shake out for them this year, and now that you do know, with the new tax code, this is the time to do it. Because
is there anything different for next year in terms of the tax code, or what we're seeing?
Things are constantly going to be evolving for the next 20 years.
Right.
And so, but the major changes already took place. Okay. So whatever happened to you for this filing season is pretty similar to what's going to happen for your next filing season.
All right. And let's just talk briefly before you go about retirement savings and how that can impact taxes.
So with retirement savings, what you can do is, the more that you put into your retirement 401 account, the less taxable income that you have. So if you up that contribution to the max of $19,000, that reduces your taxable income every pay period by that amount as a whole this year. So taking advantage of that. Also, the last minute deduction that you can take today is for your IRA. You can still put away for your traditional or your Roth IRA for last year today. Just make sure you flag it for the year that you're filing it for.
Oh, that's good advice.
Yeah.
Jeanie, thank you.
Thank you.